not a lot of people talk about bridge lenders. I didn't, in fact, I didn't learn about bridge lenders until I got in the jam, until it was like, hey, we're bumping up against the end of this term, and we can't really, we're trying to flip it. Like, we can't really go out and get the 30-year note, but because we're not going to tenant it, but we also just need more time than this 12-month or 13-month term. What do we do? So then you run into bridge lenders. Bridge lenders are kind of what they sound like. They're there to bridge a gap between one lender and another, between a short-term lender and a long-term lender. So they typically will charge you a point or two and about 9 to 10% interest from what I've seen. So while the hard money loan is usually like 12 to 13% interest, the bridge lender sometimes will go into the 8s. I've worked some down into the 7s, but that's off of volume and relationships and time, which it takes. As you stick with this game, you'll get better, you'll get more relationships. And we're going to talk about relationships after I cover this. You can get them down to 8, 9% typically, sometimes 10%. Their term is 2 to 5 years. They're only there to bridge a gap. They're not there forever. So in 2 to 5 years, that's going to be the term. It's interest only, or they can do an amortizing with a balloon payment. So at the end of the 2 years, there's a balloon payment. You just owe whatever you owe, and we need it all now. But it's a shorter term to allow you to bridge a gap. So if you needed more construction time, another 6 months, another 8 months, you could go into a 2-year bridge loan, bridge that gap. The cool thing about the bridge, outside of like the 620 credit score and local versus national, I'll say once again, the local guys can give you specialized things. The national lenders, you can take them everywhere with you. So to me, I like them as well. They'll give you 75% of the after repair value as well as a maximum. And what this means is you could go in with a hard money loan at 65%. You can typically get to a bridge lender because you have some percentage space. The bridge lender will do 75%. The hard money will do 65%. So this can be a real pressure release tool. You need to have bridge lenders in your Rolodex in case you bump up against the clock, a contractor burns out, they run off the site, you need more time, or somebody steals, you need more time, like whatever it is. This is real estate. Anything can happen. It's like this is the real reality TV, is building houses for a living. Anything can happen. You just want to have this relationship. And the application process, once again, it'll depend on the lender.